Hello everyone, I welcome you on behalf of HDFC Mutual Fund to discuss our NFO, which is HDFC Multicap Fund. To know more about this fund, we have with us the fund manager, Mr. Gopal Agarwal. Gopal has close to 2 decades of experience in the field of investments. Welcome, Mr. Gopal.
Thank you.
To begin with, Gopal, can you throw some light on the construct of the fund for our viewers?
So, as the name suggests, the Multicap Fund will invest in all the 3 categories of market, which is mid cap, large cap and small cap. So, in this fund we'll invest minimum 25% each into these 3 segments of the market, while for the remaining 25% we have taken enabling provision to invest either into REIT or InvITs or into the fund of funds or in any other mutual fund schemes also.
Okay. So you said it is a mandated allocation of 25% in each of the market segments. What about the balance 25%? Will it be dynamically managed? And are there any factors that you will look at basis which you will change the allocation? And how frequently will you change the balance 25% allocation?
Sure. So the 25% excess allocation which is being given at the discretion of fund manager, I will certainly look at the opportunity which is available in the market based on individual businesses which will be available at given point of time. Apart from this, certain macro factors also helps to rotate this money either between large cap, mid cap or small cap. Generally in the past we have seen whenever you have the favorable macroeconomic environment in terms of interest rate, liquidity and credit cost, which is really benign, then in that scenario generally the mid cap and small caps tends to outperform, and in the vice versa scenario the money generally moves towards the safety. That is why the large cap tends to outperform. So I will also look at not only the bottom up, the opportunity which is available, also look at the top down sector to rotate this 25% of the money. And this journey is a very long journey, So at various point of time we'll see, how where the opportunity lies. But at this juncture where we stand today, I feel that remaining 25% is likely to be allocated more between large cap and small cap.
What about the investment strategy in terms of stock picking, your style? As we know, there is value, growth. So what will be your style in this fund?
So very clearly, I don't have any bias towards the investment strategy. My objective is to generate consistent return with lesser volatility. So in this mandate, I really try to bucket my investment stock selection into 3 buckets. One is the growth, second is the value investing, and third is the distressed stock. So what we have seen, let's say any company which is growing consistently equal to or above the nominal GDP growth rate of the economy tends to create a very high return. So my yardstick would be improving consistent growth and expansion in ROE for a growth company. While in value investing, definitely I will always look at the valuation and the growth trigger, because value remains value until there is a growth. So I really try to figure out what are the near term growth triggers are there. So that's how the some money will go there. And then distress investing is always at given point of time your changes in macroeconomic environment gives you opportunities. So for example, in this pandemic we have seen, because of lockdown and travel restriction and all, the services sector, let's say the hotel industry, tourism industry, like your shopping malls, all were under distress. So at a given point of time, that were bought in my existing portfolio to generate return as soon as the situation normalizes.
So what is your view on the small cap segment? Given the recent rally, what makes you bullish? How do you view this space in terms of investment opportunities?
Sure. So generally speaking, as I told in my opening remark, this market small cap segment generally does well when you have benign credit cost scenario, liquidity and interest rate. and my view is that India is in a very good position. If you take medium term view, near term I would say the interest rates have bottomed. It may really likely to go up. Liquidity, which was abundance, is now normalizing. But what I feel, it will not lead to a significantly worsening scenario. It will normalize. Okay, but so the point here is we are seeing the deleveraging of the Indian corporates have already happened. The debt equity ratio has fallen from 0.99 to 0.71 by the end of the second quarterly result. And in India, what is happening because of various measures taken by the government, like we are seeing GST collections are improving, right? In many sectors, let's say PLI schemes have been offered in 13 sectors with close to 2 lakh crores of allocation. So I feel that there is a lot of impetus to make in India manufacturing sector, and also India is coming out as a sourcing hub, apart from China. So that's a great opportunity which is available, and in the near quarterly results which we are seeing, the corporate profitability is a decadal high, and we have closed this quarter, close to 197 EPS for Nifty companies. Okay, so which is very strong. So I feel small cap are likely to do well. Okay, and there can be cherry picking in manufacturing sector, or substitution sector. Even auto industries have not done well in the recent past because of chip shortage and the lockdown impact and all. So I think whenever these things will normalize, it will give another impetus to economy and GDP growth.
So there are many funds in this multi-cap category, and we've also seen few launches in the recent past. How is our fund different?
See, very clearly, I won't say that we'll be doing various very differently than what others are doing. It will be very clearly the function of stock selection and rotation between the three categories, which is very important. Here, like in HDFC Mutual Fund, we have very strong research base. We have 9 dedicated research analysts, and 3 fund managers also have, including me, have research responsibilities. So we have over 400 companies under our coverage, and we cover almost 85% of the market cap. So that will really, give us, I would say some advantage in terms of stock selection process, and definitely combination of macro and micro, may help to generate good return for our investors.
Thanks, Gopal. I have a few questions on macro side of it. So with the recent rally in equity, sharp rally over the last year and a half, one question at the back of mind of every investor is whether equity valuations are too stretched at this point in time, and whether this is indeed the right time to invest in equities.
So certainly at this juncture of close to 18,000 Nifty level, I will say that market is close to at fair valuation for a near term perspective. But the good part is that we are in a high growth environment in terms of consistent GDP growth rate, which is as predicted by many brokerages and IMF and World Bank, that in CY22 India may have close to over 8% GDP growth rate, and followed by close to 7% in CY23, and also market cap to GDP, if you look at on CY23 basis, is close to 91%. So and between 2015 to 2021, we have seen that market has ranged between 60 to 100%, barring the pandemic period. So definitely market is not cheap, but looking at the scenario, it is not excessively overvalued also. So it is, you may say it's in a fair value zone at this point of time.
You mentioned healthy earnings outlook over the next few years. Over the past few years, what we have seen is actual earnings actually missing the estimate. So do you see that trend reversing over the next few years?
So certainly in the past, between FY15 to FY25 consecutive years, we have seen like We started with a high base, and there was a downgrade every year because of various factors which played out during that period, from global slowdown to asset quality review of banks and many other factors. And while for the first time we are seeing now the brokerages and all are upgrading their earning estimate, and in though I will not take FY21, though it has really surprised, but what happened because of pandemic, you had various expectation during the year actually, so that is an aberration. But for FY22 and FY23 we are seeing there are upgrades in the earning actually, and there is an expectation that between, let's say, from FY21 to FY20, in the last 10 years we have seen the corporate India's earning growth was 70%, but starting from FY21 to FY24 we may likely have 73% earning growth. So definitely very strong earning growth trajectory is expected in the next 2-3 years. And apart from this, what has happened, we are seeing many positives in India at this juncture, right? What's happening? Our macro stability is there in terms of forex reserve, which is very solid. Last 2 consecutive years, we have seen over 100 or close to $100 billion of FII money from various sources, from FDI to to banking capital, and everything has poured into India. So which is much higher than the historical past. So because of this, our forex reserves is in a very comfortable position. We have import cover of over 14 to 15 months actually, and so there is not a major risk actually. Apart from that, there is a talk that India can be included into JP Morgan Global Bond Index. If that happens, it will also lead to some capital flows into country, so which will help to keep interest rate scenario very comfortable as the time passes.
Like you said, Nifty 50 earnings growth over the next 3 years, rather from FY21 to FY24, is expected to be close to 70% on an absolute basis. Which sectors do you think will drive this earnings growth, or what trends do you see shaping this earnings growth in the next few years?
So the consumer discretionary sector, which includes auto, is likely to do well. That is the expectation we are seeing in the street, and various brokerages estimates are upwards of close to 40% CAGR earning growth estimates are there for the consumer discretionary sector. Then followed by that, we may have material sector can do very well, and then in the banking and financial space, earning growths are likely to be good because the moderation in credit costs. So these 3 large sectors of the economy are likely to lead the earning growth in the next 2.5 years.
Thanks, Gopal. Any concluding remarks from your end to summarize your approach in this fund, HDFC Multicap Fund?
So this Multicap Fund, certainly my approach is more bottom up current, and will try to allocate between the growth, value and distress opportunity available in the market, and as the name suggests, the straitjacketing of asset allocation between large, mid and small is really, I believe, if you take medium to long term, this is a good strategy for a common investor to create wealth in Indian economic growth and participate into this journey.
Thanks, Gopal, for your valuable insights. We hope it has provided our investors and partners with more clarity on the NFO and the equity market outlook going forward. Thank you.
Thank you.
NFO period 23rd November to 7th December 2021. Contact your mutual fund distributor or registered investment advisor today.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.